For further perspective on the state of Canada's housing markets, Greg Bonnell joins us now live on location. Greg.
Yeah, definitely a lot of heat, Michael, in terms of that tight supply driving prices higher. Finally getting something that's resembling spring weather here. I'm here with Bruce Joseph. He's the president of Anthem Mortgage. Want to talk about the kind of heat we can expect in the mortgage market. Bruce, thanks so much for taking the time to join us.
You're very welcome.
So let's talk a little bit about the idea that when we get into spring, we've seen in past springs this idea of rate wars. What are you seeing in your business considering rates are already so low? Can a rate war actually happen in a low rate environment?
Absolutely. What happens is banks and brokers will actually reduce compensation to get effective on margin. So what happens there is you're going to see reduced interest rates, not so much because interest rates have fallen, but because banks and brokers are taking lower profit margins.
So it's the kind of thing where we haven't seen a lot of public warfare playing out in the papers in terms of a lower rate, but it sounds like you walk in there, you get competitive with them, you tell them that you're talking to a few other people, they can go a lot lower.
That's correct, yes.
Okay, so let's talk about the kind of demand you're seeing right now. Are you seeing, we know that supply is tight, but we also know that since prices are up, people need to take bigger mortgages. What's the demand looking like right now for your business, and what's the prospects for the next couple of months?
Demand is incredible for mortgages. The competition occurs when you have the tight supply. So the most effective thing from our business model is to make sure buyers have incredibly tight financing, because one of the major shifts is you can't get conditions on financing to be effective on a purchase these days.
Now, one of the things we repeatedly hear about Canada, not only from our own government officials, but even from officials abroad, is that we're very prudent, at least the banks have been, when it comes to lending and to underwriting mortgages. As there's this competition in the space, as there's so much heat in terms of prices and trying to bring the customer in. Are there some people at the fringes that are perhaps granting mortgages to more questionable borrowers?
Oh, absolutely. I mean, when you look at the chartered banks and the CMHC-backed financial institutions, that's of course stringent and fits within government guidelines. But there's an entire shadow banking market in Canada that's made up of mortgage investment corporations and private lenders that's completely unregulated, that lends at subprime lending interest rates, but the data is vague on it. I can just tell you from the front lines, brokers know that the growth in this market has been significant in the last few years.
And you say the data is vague. Do you get a sense that it's a growing part of the pie, though? We know it's a small number, but you're getting some sense from some people on the front line saying, well, it is actually growing quite significantly.
I think it's small, but it's growing exponentially fast. And the reason the data is poor is because these organizations are simply not regulated the same.
Okay, so in terms of this market, we know the supply conditions are very tight. What can unwind that demand, though?
The demand for
the demand, the actual demand. We know the demand is hot,
right?
But what are the factors that actually could start cooling that demand in these markets?
So I believe you'd have to have some level of a sentiment shift, and there's no observable factor that I can see that would do that in the short term. The only other thing would be some level of the pricing would become so unaffordable that individuals would no longer be able to actually buy. Another factor would be some sort of shock to the employment market, which again, I don't see observable in Ontario at this point.
You mentioned the affordability thing, because obviously when you see these different index, people measure it differently. But when it comes to Vancouver, particularly Vancouver and also Toronto, and the bottom line is if you're a median income earner, you're not going to get into a single family home. And I've noticed a lot more economists are starting to bring that into the discussion. If affordability gets so strained, that could be enough to keep people from just playing this game.
That is exactly what I believe will happen. Affordability will hit some sort of a ceiling, and that will in effect cool the market. Then you may have a sentiment shift when you have, for the first time in many years, home prices become stagnant.
So when we talk about the double-digit price increases, Korea told us today we saw low double digits, around 12, 13% for Toronto and Vancouver, 22, 23%. Are these sustainable for a long time? Obviously, in the short term, there's a lot of demand, but over time, can this keep up?
Well, that kind of asset inflation doesn't correlate or match income growth. So unless we see a significant spike in employment and median incomes, there's no long-term way that could be sustainable. In the short term, we could play around with monetary policy and continually lower interest rates. But from the long term, no.
And eventually, those interest rates are going to have to go up. We know that we're not in a quick tightening cycle either in the States or here, but we can't count on this forever. When you're looking at people who are buying homes, do they realize that? Do they know that 3, 4, 5 years from now when they renew, they might not be looking at 2.6%?
Rationally, I think everyone knows that, but we're not exactly in a rational market. And I think the belief, or it's more like loss aversion, we look back at the last few years, and most home buyers have only seen falling interest rates, so their perception is based on that. So the idea of rising interest rates just feels like something that's far in the back of their mind and not really a reality.
Yeah, there's an entire generation of home buyers who probably have never known a rate above 2, 3, 4%.
They haven't.
A reality check coming for them? Will it be a tough one?
I don't think in the near term. I think if the reality check happens, it'll be because of falling home prices, but not from rising interest rates. I think there's enough. I mean, our central bank has played around with the possibility of negative interest rates, and I think they would go that route first.
Do you think, in terms of your own business, I mean, you're a mortgage broker, you have a mortgage brokerage business, how do you insulate yourself from what could be a tough knock coming up in the couple of years?
One of the things we've done differently is focused on investor-type clients, and in the event that home prices were to fall, one of the interesting things that happens is, for an investor standpoint, yields start to go up. If you're a landlord, for example, if rents stay relatively fixed or fall slightly, and home prices fall dramatically, that's a paradise for an investor. Whereas right now, it's a nightmare for home investors, because if you were to buy a condo downtown core, you might be at a negative carry. That's more speculation grade than investor grade.
Thanks for your time and your insight, Bruce.
You're very welcome. Thank you.
I've been speaking with Bruce Joseph. He's the president of Anthem Mortgage. Back to you in the newsroom, Michael.